guys, hey, what's going on? My name is Jacob Billett, CEO of Billett Enterprises, and I want to talk to you guys about the most exciting thing that I get to do as a business owner, and that is giving out my dividend checks to my investors every quarter. And if people are like, oh, a corporation likes giving out money, that's crazy. Well, honestly, it's one of the best things I look forward to because I'm able to reward my investors for putting their hard-earned money into our company, which honestly, if it wasn't for our investors, we wouldn't be where we are. So, this right here is just kind of a look at some of the checks. We currently have about 20 investors with our company right now. And again, them giving us their money for us to use how we see fit, and then giving them returns every quarter really is one of the keys to our business strategy. So if anybody's not really familiar with dividend investing, it's actually one of the best ways to get passive income. And I'll go ahead and explain what really truly passive income is. So a lot of money-making people online, they tout about passive income with affiliate marketing or other types of, which is, again, it's a great business model. But when it comes to marketing like that, you got to put in a lot of time when it comes to building the websites, building the backlinks, finding the products that are going to be the most profitable for you to sell, and having a network to do so. I like passive income, which pays me to do nothing. Literally nothing, and I make money. That's actually one of the reasons why myself and my baby mama, Angela, who's actually filming this, because we're kind of on a cutthroat little budget right now because we're getting ready to get this Nebraska property listed and all of our stuff's in storage. Like, I had to get my computer and stuff out of storage today just to do this for you guys today. And anyways, it's been a mess. If you've been following our Facebook, you've seen that some of the stuff we've run into with our Nebraska product. Anyways, getting back on subject here. So I really like to make money doing nothing. And that really is kind of the American dream of being able to go off and do your own thing, and you look at your bank account every month and more money is coming in. And so dividend investing is actually touted by Warren Buffett. He's one of, obviously, if you're in business, you know who Buffett is. He's actually a huge advocate on dividend investing. Dividend investing basically is that you take your money and you put it into a company, be it publicly or privately traded, and that company takes your money, gives you shares of the corporation or shares of the business, which gives you what's called an equity position, and they pay you a percentage of dividend according to your investment every month, every quarter, every year. So for example, take my company for example. So we have what's called Billett Enterprises, and we pay a 5% APY, annual percentage yield, or dividend yield to our investors every year. So a 5% yield, what is that? So a 5% yield is, for example, if you give us $100, 5% of that is getting a return to you every year. So for example, $100 gives back to, if you put $100 into our company, not only are you getting an equity share of 100 shares, so you are now a partial owner of our company in perspective of how much you put in, but you have that equity position with us, and we give you a 5% return, or $5 yearly, back to you in cash. And that is basically paid out with our retained earnings that we have throughout the year or quarter, etc. So some companies, for example, you take Ford, for example. Ford pays a pretty good dividend. They're what's called a blue chip stock, meaning that they've saturated the market. So everybody knows the Ford Motor Company. Everybody knows their vehicles. And so they don't really have an explosive growth potential because the market's saturated. So to attract new investors that come in, they do what's called a dividend yield or a dividend payment. And I believe it's running about around 6% right now based on their stock price. So our company did something similar to that, but we're what's called a growth company, meaning that we're young, we're starting up, our company is evaluating, we're worth more money as the days go on, we're taking more market share. There's a lot of growth potential, plus we pay a dividend as well. So finding a growth / dividend type of company is really ideal. And so not only are you getting, because some people go, oh, 5% return, that's really not that much, which, correct, it's not. You always try to beat the market. The market historically is about 10 to 12% return yearly. So if you get more than a 10 or 12% return yearly, it's what's called beating the market. Which means that you're doing pretty good. Means that your active or aggressive investing is doing better than what, say, index funds are doing that pace the market. So you look at a 5% and go, well, that's not really that much. Well, again, you could put that money into a savings account or a CD or whichever, make a percent or a portion of a percent yearly, which again, looking at inflation, and inflation has been in check here for the past couple of years, but looking at inflation, it kind of chips down what your earnings would be, etc. But again, a 5% dividend stock will pay you more than what that interest would be, but you're also getting an ownership of a company, and that's a big deal. So for example, if your 5% dividend, which is paid to you as long as each quarter it's what's called a declaration of dividend. If a declaration of dividend is put out, that means the company's paying you a dividend for the next quarter or year, however their payment schedule is. But if that company grows 5%, so for example, if the stock goes up 5% or the valuation of the company goes up 5%, plus you're getting a 5% yield, well, now you're at a 10% return. You're at or beating the market, which is extremely exciting. And no matter what happens with that company, as long as that company declares that it's going to be paying out another dividend for the quarter or for the year, you're guaranteed to get that money regardless of what happens with the stock. Again, as long as a company is profitable, because from the retained earnings is what pays out to you. And so that's a really, really exciting thing. And that's one thing that we wanted to do for our investors, is to not only being a young startup and being a new company, people are skeptical on that, as looking at speculative risk and risk tolerance, etc. So we wanted to reward them from giving their money into us. Plus, we wanted to be able to take that money and refinance different things. And that's one thing that's really good to look at. Like, why would a company pay out dividends? Why would a company not just take that money and just focus all that money into growing the company? So for us, I'll tell you exactly where your money goes. If you invest some money into us, we're guaranteeing a 5% annual yield or annual dividend payment paid out in quarters. So for example, we pay out every 3 months. It's a 5% annual dividend yield, but we pay out 1.25% every quarter. And I like that because it reminds people that, hey, I got money coming in. I'd rather get 4 payments throughout the year instead of 1 payment throughout the year, because it just keeps me involved, and it keeps the shareholders involved and excited. Plus I love writing checks to these people, so it's really cool. But again, when that money comes in, we typically refinance debt. And so when we are getting this money coming in and only paying out 5% yearly, well, some of the credit card debt that we've used on some of our larger projects, or some other mortgage loans or liens that we have on some of our properties, well, paying a 5% out to somebody over an extended period of time makes a lot more sense than us paying a 20-something% APR on a credit card. Or with mortgage rates, and mortgage rates are fairly low right now, but I would much rather have that money go to an investor than go to a bank. And so that is something that we can reward you for putting money or putting your hard-earned cash into our company. And so really being a dividend investor makes you the bank. And not just is that making you the bank, but it's also making you a owner in a company. So you do have stake, you do have voting rights, and you can really influence the course of a company just having an equity position in the company. And so this really truly is one of the best ways to get passive income. Now, really the catch is that you have to have capital to put it in the first place. So a lot of these, earn passive income with no cash or no money needed, which typically is extremely hard in saturated markets. If you do have the capital to invest, dividend investing truly, truly, truly is a passive way to make money. Our investors come in, they don't do anything. They just have the capital getting to our company, and we do the work for you, and we reward you to have the privilege of having this capital and continue our business running and taking that money and having that money make us money and then also make you money. So really, it's one of my favorite ways. And again, if a lot of people are aggressive investors, dividend investing is a lower risk. Even though if there's less risk, there's less rate of return typically, but it's a really good way to diversify your portfolio and protect you in case you incur losses on more aggressive or more speculative investments. So that's kind of and a matter of fact, in the description, I'm going to go ahead and link an article to Investopedia, which will give you a little bit more information in case if you're a text learner, to see how dividends do work. But that's one of the big things. A lot of people are like, hey, when we see you giving out all these checks, how can we get involved? Well, that's what it is. These are people that have invested in us, and we are paying them back for the privilege of having their money and making them partial owners of our company. So yeah, that about wraps up dividend investing and passive income opportunities, and we will see you in the next video.